As Mnuchin says, he's ready to talk, and it's some of that that's pushing futures higher, Matt.
Yeah, absolutely. That's what drove the U.S. markets to gains yesterday. That confidence, that optimism, which is interesting because this looks like a debate that's going to be difficult to get done. If you take a look at futures here, they're up, not huge gains, but more than 1/3% on the FTSE in London. DAX futures are up about 0.3% here in Germany as well. After, we had a drop in European equity indexes yesterday, and the U.S. finished just slightly in positive territory. Here's a look at the live trade. This is the global macro movers screen. Each column represents, as you can see at the top there, a different risk asset, and the far left-hand column is equity indexes. You can see the FTSE up about 0.3% right at the start of trade. The IBEX in Spain also coming out of the gate in positive territory, though just barely. The DAX open early on a Friday morning, also just waiting above the waterline there, and the CAC 40 actually down about 0.1% in Paris. So European markets, Anna, opening higher, but a little bit of a mixed trade this morning.
Yeah, so opening it to the upside. This comes as investors weigh the chances of that new American stimulus package against an uptick in coronavirus cases here in Europe. And let's talk to Justine Colley, Sanlam UK Portfolio Manager. She's with us this morning. Justine, good morning. It's really interesting to see that investors, when they weigh up how concerned they are about what is no doubt a human and public health crisis in the uptick in virus cases in Europe, they weigh that up against stimulus, and if they see stimulus coming from the US, investors seem happy to send these markets higher. What do you make of the way that the market is assessing those two things at the moment?
Yeah, well, that's exactly what we're seeing. I mean, it comes down to points relating to dollar strength and tech and looking at value versus growth. Investor sentiment and piling into the dollar is what clients are doing at the moment. It's not because they've got any faith in the US, but purely because they're waiting for the stimulus. So we're seeing that exactly in behavior of where our clients are behaving at the moment.
And I mean, if you see dollar weakness there, continued dollar weakness, Justine, is really the forecast that we hear from most FX experts on this program. Does that mean investors are going to want to rotate back into Europe, even into the UK?
Well, I mean, it's our opinion at Sanlam too. We are expecting there to be dollar weakness. The only reason why there's dollar strength at the moment is waiting for the stimulus package, and investors are taking a far more hawkish stance. We don't believe there is going to be a swing into value, and the reasons why is in order for value to do well, we need a strong economic recovery, we need a certain COVID vaccine, and we don't have that at the moment.
And so if you see no swing into value, does that mean you stay underweight the UK? And where do you prefer to get exposure, Justine?
So we are actually not the kind of company that focus on a certain geography. We're far more bottom-up stock pickers. We look at companies that have growth, strong balance sheets, ones that aren't going to have a massive problem either way when it comes to macro forecasts. At the moment, with valuations trending the way they are in the US, we're actually underweight the US. We are underweight UK as well. And we're looking for growth opportunities, predominantly in Asia as the overweight position.
And you want companies with low debt, which I think, well, how difficult is it to find companies, strong balance sheets with low debt at a time when borrowing is so cheap?
Well, we've got a certain methodology and a due diligence practice that we deploy that screens the universe of MSCI stocks, which ensure that we have a certain balance sheet criteria, that we have certain free cash flows, that we've got certain earnings growth forecasts. So the pool or the universe of stocks is available. And for that reason, we do see quite a few opportunities.
And let me ask you about things that might throw your portfolio off track, Justine. How nervous are you about the US election on the horizon? Because some point to the VIX and the way it seems to be suggesting a great deal of volatility around the election and then maybe for a month or so afterwards. Others say, the markets will get enough information to work out who has won very quickly. Goldman Sachs making that point. So if you're a bottom-up stock picker, how much does the election weigh on your thoughts at the moment, or can you look through it?
Yeah, so it does weigh on our thoughts at the moment, and it's for that reason where we have taken profits in some of our very lucrative positions in the US and look to use those profits elsewhere, for example, in Asia. We are seeing still opportunities, but we've been more cautious in our allocation to the US coming up to the election.
In terms of the risk there, how high do you think it is, Justine? I mean, do you still look at those, macro issues that could affect your investments?
Yeah, so of course there is a risk, but it's very difficult to tell, what the outcome will be for an election. The strategy that we tend to deploy when there are election results is to have enough risk on the table that we could benefit from an upside, but also take away a certain level of risk to ensure that if it does go in an opposite direction, that we won't be significantly hurt.
Justine, thanks very much. Stay with us. Justine Colley, Sanlam UK Portfolio Manager. She stays with us. We'll get some individual stock names that Justine is interested in. Justine Colley, she likes healthcare and tech, but she doesn't hold Tesla. Up next, we'll discuss Justine's investment strategy. This is Bloomberg. to the European market open at just 8 to 9 minutes into the trading session, and this is the fairly mixed picture we have for you across European equity markets. We do see some individual big movers, but in terms of the overall markets, not moving a great deal. US futures look pretty mixed this hour as well. Let's go to Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Palantir plans to go public next week, and Dow Jones is reporting its expected valuation is almost $22 billion. In 2015, investors valued the company at $20 billion, but as recently as this month, PitchBook valued it at less than half that. Palantir declined to comment. Amazon is diving into the new and hotly contested market for streaming video games. Its Luna Plus service will cost $5.99 a month during the introductory period. It will let gamers play without shelling out for expensive consoles. Amazon is also introducing new spherical models of its Echo and Echo Dot speakers. Colony Capital is selling nearly 200 hotels to hospitality management company Highgate. It's part of the real estate firm's shift away from traditional brick and mortar properties. The deal is valued at $2.8 billion. The vast majority is Highgate assuming debt. Hospitality is continuing to struggle due to the pandemic. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura right there with the Business Flash in London. Let's get back to our guest, Justine Colley, Sanlam UK portfolio manager. And Justine, talk about some of your investing. We were just talking, Laura was just talking about Palantir. And what do you think? I know you like tech stocks. I know you're also invested in the data, like analytics space, right?
Yeah, so we've got quite a high allocation to technology in general. About 20% of our portfolio is in various tech names. You correctly pointed out, we aren't a holder of Tesla, but we are in various other companies such as Facebook, Tencent, Becton Dickinson, which has a medical supplies company, but in the tech space as well. Yeah.
I was looking at a chart of some of the big tech names, though, in the US, Justine, and some suggest that they're losing momentum at this point. Is that something that concerns you, whether they can continue to make the gains that we saw post-March?
Yeah, so that is very topical for clients to talk about at the moment. We see a lot of room for growth in the tech space purely because of the nature of these companies. They cash rich, they have strong balance sheets, they have very good cash flows, they have very good earnings and growth prospects. Yes, the rally was extreme. I mean, Facebook, I think, was up about 44% already this year. So it's a worry for investors, but for our investment methodology, we still have a significant exposure to tech and will continue to do so.
When you look at investing in solar and wind, investing in alternative energy, ESG investing, which I know you've done a lot of as well, we're talking about that on the MLive blog today, whether or not this is kind of just a trending fad or whether investors are serious about it. What kind of time horizon are you looking at?
Well, we are, in terms of relocating to more ESG names, we aren't looking at a specific time horizon where we need to deploy this. We are naturally moving towards an ESG stance. And the perfect example of this trading methodology is moving away from oil companies into more alternative companies such as Ørsted or Athiona in the wind and solar power state. We would much prefer to be part of the solution rather than holding legacy assets. So that's the move that we're currently taking at the moment.
It's just on another subject. Inflation preoccupies many in these markets, Justine, the absence of it and whether it can be created. I'm just looking at some headlines coming through from the ECB's Villeroy de Gallo, and he's talking about how the ECB might let inflation rise above 2% for some time, kind of echoing the Fed, I suppose, suggesting some tolerance for much higher inflation. But that's a nice problem to have right now, isn't it? Because we don't have much inflation. How does that play into your strategy? I know that gold is something you've looked at. Do you hold that because of your inflation view or something else?
Yes, so we do hold, especially in the more conservative asset classes, inflation-linked protection assets. Gold is one of them. I know gold and silver, as you've seen recently, has been under a little bit of pressure, which is expected with the dollar strength. But we do see this as an asset that it forms a crucial and core part, especially in our more conservative mandates to clients.
What about the geopolitical risk involved in real estate, or do you think right now that's at a low level?
The geopolitical risk in real estate at the moment, yes, it is at a relatively low level. Our exposure to real estate has changed significantly over the year. We have had a far more broader exposure to real estate, but we have narrowed that down now to companies that are more focused on potentially residential landlords as one of the examples, or focusing on companies that are in the US in residential as well. So we've had a far more narrow focus in order to take control of the risks involved in the sector in general.
Yeah, and can I ask you about other plays at the moment, Justine, other picks that you have at the moment? I know that Intercontinental Hotels is one of those. Is that because you just think the sector's too cheap, it will recover at some point? What is the thinking? This is a really beaten up sector, of course, the hotel industry.
Yeah, so the hotel industry has been heavily hit by COVID, as we all are aware. Intercontinental Hotels is a great company, and it does stand out. There are probably about 3 reasons that I would talk about. The first being that it has a very strong balance sheet. It's a very capital light company. They don't own the assets, so we aren't concerned about that, but more take a booking fee. The other point to notice is, yes, they've got a lot of exposure in the US, but their growth opportunities in Asia is what is very appealing to us. And the other point is obviously the balance sheet strength and the growth that they have. They have the ability to grow hotels at an exceptionally high rate. Overall, the hotel sector is under pressure, but IHG, because of those 3 reasons, is a company that we'd prefer to hold in the sector.
All right, Justine, thanks so much for joining us. Justine Colley there, Sanlam UK Portfolio Manager. She's going to be continuing the conversation with us on Bloomberg Radio at 9 a.m. UK time, so tune in for some more strategy then. Coming up, as virus cases rise in the UK and France and Germany, the original hotspot in Europe seems to be skipping the second wave.
Welcome back to the European market open. Just coming up to 19 minutes past 8 here in London. European equity markets fairly divided this morning in terms of which direction they should head. US futures were looking fairly mixed. Now look flat to positive. Now, EasyJet is weighing the impact of the new job support scheme announced by the UK Chancellor Rishi Sunak. The CEO, Johan Lundgren, said at the he made that point at the World Aviation Festival. Speaking to Bloomberg's Guy Johnson, he said governments need to do a better job of supporting the travel industry.
There's a case to say that the situation that we are in and the consequences of the government-associated policies on the restrictions for travel, that is a result of the pandemic, which we clearly all accept, has an enormous effect that you can't expect the industry to be able to cope and to handle with. So I'm not against that support. And what is not good at all and what is not acceptable is that it's so differently and unevenly distributed. So you can, if you take EasyJet as an example, going into this crisis as one of the world's financially strongest airline, and because we are not in that, desperate need to get the funds to survive here next week or next month, we might not be seen as a case who is in need of that. And the same thing goes for a number of other companies also in the UK, where these billions has been, poured into a number of other airlines. That distorts the market and that distorts the competition, and that's what I'm against.
We spoke to a professor the other day on Bloomberg TV, and he talked about EasyJet received a massive handout. On what scale do you think you do need assistance? I'm sure you would push back against that very, very strongly, and you've only got to look at the arithmetic in terms of the amounts that are being received by the likes of Air France, KLM and Lufthansa and compare them with what the UK carriers receive to see the gulf that exists between the two. But on what scale do you need assistance?
Well, first of all, that's a very ill-informed decision. You should not make comments about these things if you don't know the facts. I mean, the case is that there are a number of flagship carriers who received, if you divide the support versus the revenue, some up to 38% on it. We received, less than 10%. So we've been getting access to the CCFF scheme, the 600 million, which was available for all companies who had a credit rate investment. And you would also know that there are companies in there doesn't pay UK corporate tax, who has less than 100, couple of hundreds employees versus EasyJet's 8,000 employees in the UK also had scheme. So we think it's unfair. And then we also have had the furlough, which has been very helpful, I should say. But the matter is that it is the difference in the scale that is the concerning part. So, what would we be looking for? Well, we would like to see that there's, first of all, is a general support package for the industry. But this is not only enough in terms of just the, removal of the APD and also the ATC charges. We would also need to have a much more refined quarantine system. We will also need to make sure that testing is introduced, because that would also bring confidence back into people to fly. A testing system will not replace a flawed design on the quarantine system, but if you had a much more targeted, risk-based approach when it comes to the quarantine, you could introduce the testing into the higher risk areas. And that needs to happen at the same time that the supports come in to the whole of the industry. But we can't rule out that there also needs to be, specific support coming into companies such as ourselves, also in the UK.
And that was the CEO of EasyJet, Johan Lundgren, speaking with Guy Johnson at the virtual World Aviation Festival. Now, as Europe strains to control the resurgence of the pandemic, Germany, France, and the UK are all reporting a surge in COVID-19 cases. In Spain, the pace of new infections slowed in the past 24 hours, but hospitals in Madrid are under alarming strain. Meanwhile, Italy appears to be coping better than its European counterparts, recording lower numbers of daily cases. For more, Ferdinando Giuliano joins us from Bloomberg Opinion. Ferdinando, why is Italy, or what is Italy doing that is keeping it safer than other countries in terms of increased infections?
Look, I think we've learned this year that it's very hard to make any, precise explanation about what the country is doing right. I mean, for example, in the spring, we saw that countries which locked down earlier seem to be doing better, but then we saw that Sweden's cases fell, even though the country adopted more liberal policies. So it's hard to tell. I think there are two areas where Italians seem to be doing very well. One is, I think the healthcare system is doing a really good job in tracing the spreading of the pandemic, and I think doctors are doing a very good job at treating patients. And then I think there is widespread compliance with social distancing rules and wearing masks, especially indoor. And so I think it's a combination of what the healthcare system is doing and what the population is doing. But again, this could just be a delayed wave, and maybe Italy will pick up in the coming weeks for mysterious reasons. So we need to be very careful, I think.
Yeah, Ferdinando, I mean, maybe there's weather in here. Maybe I'm sitting in London where we were late to the first wave, but very much part of this second one. How ready is Rome for things to get more difficult as we get into the winter months?
I think that's the key question. I mean, we've been told there's been investment in healthcare, in particular with regard to public health, which was really a bit which had been underinvested in before the pandemic. They say they have more intensive care units, which again was an area of stress. And I suspect, we won't see what happened in February and March, where really the country was caught off guard by the pandemic. I think a big question here, as everywhere, is over schools. We've just reopened schools, and whether or not we are able to keep a kind of efficient tracing system with, when you have kids testing positive. So I think, we can be mildly optimistic, but again, it's a very steep challenge here everyone is facing.
All right, Ferdinando, thanks very much for joining us. Ferdinando Giuliano there talking about Italy. He's also got some great pieces lately on the ECB. I recommend you check out the opinion section on your terminal. Just type OPIN, go for his work and the work of his colleagues as well. Up next, it's Britain's winter of discontent. Chancellor Rishi Sunak lays out his plans for keeping businesses afloat as the nights draw in. We'll talk about what it means for UK equities next. This is Bloomberg.
Welcome back to the European Market Open. 30 minutes into your trading session. Let's have a look at where we are this Friday morning then for European stocks. And we're making very modest gains across European equity markets in aggregate, but that hides some real divergence. We've got the FTSE 100 up by 0.3%, the CAC 40 in Paris down by 0.4%, the IBEX up 0.3. So we do have some divergence going on here. US futures point modestly to the upside, so we'll keep an eye on that. In terms of the sector breakdown, then we've got telecoms moving to the upside. That's the biggest gaining sector. Auto parts and technology and healthcare moving to the downside. So there's not a very clear picture in terms of which sectors are popular today. In terms of the telecoms moves, then, if I just pull up the detail on the telecom sector, I can see that Telefonica is the biggest gainer within that sector, and we also have KPN over in the Netherlands moving higher, both of those up by more than 2%. A bit of a defensive flavour to that, perhaps. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. House Democrats have started drafting a new stimulus proposal of roughly $2.4 trillion. The plan could get passed by the House next week. While smaller than the package the House passed in May, it's still much larger than what Senate Republicans say they can accept. President Donald Trump has indicated he'll go as high as $1.5 trillion. The South Korean, vying to lead the World Trade Organizations, say the agency must be revitalized. That's so it can settle some of the bruising trade disputes between the US and China. South Korea's trade minister is seeking to be the first woman to lead the global group.
Of course, it would be naive to expect them that WTO can resolve everything overnight, but still well-functioning, revitalized WTO as a forum for negotiation and as a forum for dispute settlement could be part of the solution.
The Federal Reserve's Lyle Brainard is seen as the focus of Joe Biden's search for a Treasury Secretary. Bloomberg sources say the more provocative option of Senator Elizabeth Warren has not been ruled out, but is far less likely. Brainard is seen as a choice that could be universally accepted by Wall Street and progressives. One source said she was more interested in the role of Fed chair. Global news 24 hours a day on air and a Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
All right, Laura, thanks very much. Laura right there with your first word news. Now, UK Chancellor Rishi Sunak has laid out his plan to protect jobs after the furlough scheme ends in October. Instead, the Treasury will top up the wages of part-time workers. Business loans and a VAT cut for the hospitality and tourism sectors have also been extended. So what does this mean for UK equities, which have struggled to rebound significantly since the sell-off in March? Joining us now is Tineke Fricke, Waverton Investment Management Head of UK Equity Research. Tineke, what do you think about Rishi Sunak's plans yesterday?
Yes, good morning. Thank you for having us. It's a mixed picture, really. It clearly is an improvement for just having a furlough scheme not being extended from October. However, it will mean much more hardship for those sectors that are completely closed, because clearly there is no support to be had. And for those where they do have partial sales, so where employees are working, companies will need to pay more. So overall, it's less support, but it's still better than nothing. However, I do think we can expect rising unemployment from the end of October onwards on the back of this plan.
Yeah, and we'll see how bad that story gets. Good morning, Tineke. Let me transition from the macro support that we're getting, the fiscal support, into how you invest around UK equities. It's not a direct link, of course, because certainly the FTSE 100 reflects many more global themes than UK domestic ones. I was looking at the companies that you're interested in, and you like Shell, and we see that the shares in BP have been selling off aggressively in recent months, but also Shell under pressure. We've just tracked the two against a basket of ESG goods, and I wonder why you want exposure to either Shell or BP at this point, when you consider how ESG has performed by contrast. What is your thinking around having a conviction in favour of Shell?
Well, in order for the world to transfer successfully, in the different, from fossil fuel to renewables, we need to have the major power company to contribute. Otherwise, it doesn't happen. Shell was one of the first oil majors to lay out their energy transition plan, and it was probably announced a couple of years ago, and they were very firm, saying, well, this can only happen when the whole industry rallies around this, and also when all the customers rally around that. So BP only recently announced their energy transition, so all majors are now committed to, over time, move away from fossil fuels and bit by bit increase their role that they can play in providing renewable energy, and for us consumers to be able to power our cars by whatever means necessary. So Shell and BP have very large charging divisions in the UK, but also in other parts of the world, because clearly one of the main barriers to us buying electric cars is that we're concerned that the battery will run out halfway up the M1, and then what do? So we need energy companies to help us transition, and we believe Shell and BP are saying the right things. This will take time. And you earlier in the program, you mentioned divergence, because the share prices of both BP and Shell really don't give them any credit for any success that they might have in this energy transition. And frankly, we need them to be successful for us to be able to get a lot more from solar, a lot more from wind, a lot more from hydro, etc.
Yeah. Yeah, well, it would be interesting if Shell and BP would just install high-speed chargers at all of their petrol, and diesel stations, because I have to say, as of now, it's really difficult to take an electric car trip any length of distance, certainly here in Germany. I'm not sure how it is in the UK. I noticed that AstraZeneca was on your list as well, and my COVID antenna go up instantly, wondering how much this plays a part. It doesn't, does it, play a part for you in that investment?
Yeah, you're absolutely right. So AstraZeneca is not a vaccine company. So their decision to help manufacture and distribute the Oxford COVID vaccine, if successful, clearly, is a humanitarian response, because AstraZeneca is a global company. So they fully, go behind this Oxford vaccine, but will make no money off this whatsoever. So this is really to help the world manage COVID, and prevention through vaccine is clearly one of them. They are doing a little bit in trying to see if some of their antibodies might help prevent or treat, or some of their existing medicine might be able to protect organs, for example, because organ failure is a big issue for severe COVID patients. So it's a little bit, but it's not the reason why we like AstraZeneca, which is really their oncology focus and their China focus.
All right. Tineke, thanks so much for joining us. Tineke Frikke there, Waverton Investment Management, head of UK Equity Research, talking to us about their focus on a few of their picks as well. Appreciate your time this morning. Up next, did eating out help out? London's restaurants fear a crippling blow just as they begin to regain their footing. We'll speak to the Chief Operating Officer of restaurant operator D&D next. This is Bloomberg.
European market open 41 minutes into a trading session that is either side of the flat line for European equity markets. Overall, making some modest gains up around 0.3%. US futures point modestly to the upside. Now, Britain's restaurants were the target of one of the most popular measures to cushion the economic blow of the virus over the summer. The Eat Out to Help Out scheme subsidised meals during the summer months. The government said it helped to protect 1.8 million jobs, actually just in August, wasn't it? But with virus cases rising, Boris Johnson has announced a 10 p.m. curfew for restaurants and bars. Could it deliver a crippling blow to the industry just as it begins to regain its footing? Joining us now is David Louis, who's the D&D COO. D&D operating a number of restaurants, of course. Good to speak to you, David. After you've had a day or two to think about the new regulations and you've listened to what the Chancellor had to say yesterday, do you think all of your businesses will make it through to the other side of this?
Yes, I think our businesses will make it through, but it's a big kick in the teeth. I mean, as you just mentioned, Eat Out to Help Out was a fantastic initiative and showing confidence, the government showing confidence, get back to work, guys. The corporates were starting to come back, and there was a slow progression towards, you know, a little bit more normality and people on the underground trades. And this is a great big kick in the teeth. This is a total overreaction from the government. 5% of cases come from the hospitality world, and this is a big kick in the teeth. We'll make it through, but I'm also the chairman of the Restaurant Association of Great Britain, and a lot of restaurants out there won't make it. There's going to be carnage out there.
Why is it so important? I'm an early riser, so I hit the sack as early as I can as well. Why is it so important to stay open past 10 p.m.?
It's not just the 10 p.m. Of course, you're right. A lot of restaurants, a lot of our restaurants, you asked me initially, will we make it through? And of course we'll make it through. A lot of our restaurant customers will eat earlier. But there's the pub sector, there's the bars where people go out and drink. And actually, we've, you know, the restaurant world are very, very conscientious. We put a lot of effort into making sure people are safe, making sure our staff are safe. And that's why there have been very, very, very few cases coming out of hospitality. But why is it so important this time? It's a lack of confidence. It's the government saying restaurants and pubs are dangerous. Beware, go home. Of course, people won't go home. The younger people will go home and party. So in fact, it's going to considerably make it worse, not better. It's an overreaction from the government, but it shows a lack of confidence and saying to people generally out there, it's dangerous.
Yes, it's a point that I've heard made by others in the industry, David, that there are more deaths in other settings, but this is something that can be done with high visibility. But what about innovation from the sector? How much are you managing to cushion the blow with delivery, for example, or at least click and collect meals? I know that's probably not something that your type of business did before, but correct me if I'm wrong. Business meetings, playing host to other types of events. Are you able to think creatively to try and cushion the blow?
Oh, yeah. I mean, restaurants have to think on their feet to survive. It's always been a very entrepreneurial business, the restaurant business. So, yes, of course, and delivery has gone up. But, you know, people have been eating at home for a very, very long time. And there are two parts of the restaurant business. There's eating at home. And remember, even at home now, people are being told, and people are taking this very seriously, you can only have 6 people in your house. So it's not as if you can have a party at home. So whereas before there weren't those regulations. So yes, of course, the delivery business, moving businesses around, covers around so that people eat earlier, as you said, making people go out at lunchtime more. So look, the customers were, you asked, it's very early days. Yesterday was the first day of the new regulations, and a lot of customers were ringing up and shifting their bookings. Maybe the government think that COVID doesn't come out until 10 o'clock at night.
That is, that's certainly an important, interesting observation. I have not understood why the time of day really makes a huge difference, but I have to say, David, I think we're all pushing for you. Certainly, the government wants restaurants to make it through, even if you think they're doing it in a handling this in a misguided way. If I come to London, I'll be sure to go to your restaurants as often as possible and drink it as much as I can. David Lowy, thanks so much for joining us. D&D COO. Yeah, and I think, Anna, it's safe to say that everybody wants the restaurant and pub business not only to survive but to thrive, right?
Yeah, absolutely. Everybody wants it to survive. And I suppose a lot will depend on whether any further lockdown measures are deemed to be necessary. If that political decision is taken, or health decision, whichever way you pitch it, to further clamp down, then that could be the thing that sends businesses under. And as David was saying, he's chair of the Restaurant Association, so very well tapped into the fears that industry has. Let's talk about another sector now. Citi, in the banking sector, will spend $1 billion on efforts to help close the racial wealth gap over the next 3 years. That's as the US banking giant seeks to become an anti-racist institution. The announcement comes alongside a report that the US has lost $16 trillion due to the racial gap. For more, let's talk to Sri Vijaya Bhaktavatsalaam, our managing editor for finance and investing, joins us now. Sri, what steps is Citi actually taking then? What does this look like in turning this lofty ambition into policy and action?
Good morning. So more than half of the funds that Citigroup has earmarked for this project or this plan will go towards home ownership and supporting home ownership for disadvantaged people, minority people of color, and help get affordable housing by minority developers off the ground. So that in and of itself, there is a very big disparity in terms of home ownership all over the world, and in the U.S., it is fairly pronounced along racial lines. So that will go a long way in addressing some of that imbalance. And the other thing that they have said is that they will use about $350 million for opportunities for Black-owned suppliers, so procurement opportunities, and that too will help businesses that are owned by minority business owners.
So what does this report actually say? What are the findings?
It is, so the opportunities from, so there have been a lot of lost opportunities. Lost wages is really a very big component of this. Fewer opportunities for people to go to college and higher education, less access to small business loans, to property, and all of this has really shaved off a huge amount of money from GDP, 16 trillion in the past, and Citigroup found that the U.S. could really make a very big difference and end sort of a lot of, not only would they be able to end economic discrimination, but also it could actually boost GDP over the next 5 years to the tune of 5 trillion. So these aren't small amounts of money that we're talking about, and it is a pretty stark number. How much of a difference ending these forms of economic discrimination can actually make to the economy.
Sri, interesting story. Thanks very much for bringing it to us. Sri Vijaya Bhaktavatsalaam, our managing editor for finance and investing. A bit of breaking news on the utility space in France. We're getting some further comments coming through from Veolia's CEO saying he will improve the price for the Suez bid to Engie. Remember, Veolia is saying it's ready to buy 29.9% of Suez, despite what is described as a poison pill, so tactics aimed to put off bidders. Veolia will submit a detailed offer to buy that stake in Suez from Engie ahead of Engie's board meeting. That comes later on Friday. Up next, gold is challenged by rising real rates and the dollar. That is the macro view of Venram. Bloomberg's Markets Live currency and rate strategist joins us next. This is Bloomberg.
welcome back to Bloomberg Markets. This is the European Open. We are 53 minutes into the session, and we're looking at a mixed trade here with the DAX and CAC down. The FTSE, however, still gaining only 0.1%, about 7.5 points right now. But joining us to discuss these markets is Van Rom. He's Bloomberg's MLive currency and rates strategist. And although it's really officially neither of the two, Van, you've got a macro piece out on gold saying it's challenged by rising real rates and the dollar. What's the story?
Morning, Matt. That's right. Even though it's neither of those, I'm essentially looking at gold as a fixed income derivative rather than as a commodity. And what my model shows is that two factors, basically real rates and dollar, can explain more than 90% of recent movements in the metal. So gold is getting hammered this month as real rates have climbed about 20 basis points, and we've also seen the dollar come back with a bang this week. So if we take the view that nominal 10-year Treasury rates are going to stay put around 65 basis points, give or take.
Ladies and gentlemen, good morning. I'm placing an order to buy euro at 116.713. Okay.
Matt?
And Van, a lot will depend on the dollar, of course. And as we get towards earnings season in Europe, a lot of businesses will be thinking about where the dollar is in relation to the euro. I'm just looking at the dollar overall, the dollar index. Clearly, it was subdued through August and September by recovery in risk appetite. But now that seems to have changed. Where do we see the dollar heading?
I think dollar has a good chance of coming back, Anna. If you remember, a couple of months ago, we discussed on the show, and I was positing at that point that the dollar might come back around the time of the U.S. elections. And as it happens, it's just coming back before that. And I think it's got legs to run, really, because you know, what's happened with the euro is a bit disconcerting, because the ECB at the meeting flagged that they were okay with, they were tolerant to further appreciation in the euro. But in the next couple of quick days, Christine Lagarde and all the other policy officials began saying, the euro's levels do concern us, and that's kind of taken some out of the euro sales. That means essentially
The order to buy cancelled. As you can see, it moved too far. Okay, I'm cancelled it.
The new wave. France and the UK report record daily virus cases. Britain's Chancellor warns of an unemployment tragedy despite extra support. The trillion-dollar gap. U.S. Democrats draft a new $2.4 trillion stimulus bill as Mnuchin says he's ready to talk. Markets struggle for direction. And Republicans push back on Trump's threat to defy the election results. Goldman says markets are overestimating the risk from delayed results in the presidential election. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. So let's have a look at what is going on in the markets. European stocks edging higher. U.S. equity future also pinning hopes on this new American stimulus package to counter the global uptick in coronavirus cases. I'm looking at dollar slipping, cutting into its best week since April. And I'm also looking at treasuries. They're pretty much steady. West Texas crude oil steady above $40 a barrel as well. Now let's get straight to the Bloomberg. For News here in London with me is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Over in the U.S., House Democrats have started drafting a new stimulus proposal of roughly $2.4 trillion. The plan could get passed by the House next week. While smaller than the package the House passed in May, it's still much larger than what Senate Republicans say they can accept. President Donald Trump has indicated he will go as high as $1.5 trillion. Now, New York Governor Andrew Cuomo says he doesn't trust the Trump administration over a vaccine. He's vowing the state will independently review anything authorized by the federal government. He noted how polls show a growing mistrust of a vaccine. New York may also require travelers from Europe to abide by its 14-day quarantine rule. Here in the UK, rebel members of the Conservative Party are threatening to seize the power of Parliament to block new coronavirus rules. At least 40 Tories have put their name to an amendment, all but wiping out the government's majority on the issue. It comes as the Commons is due to review the government's pandemic legislation 6 months after it was enacted. The move would still need opposition backing. And the Federal Reserve's Lael Brainard is seen as the focus of Joe Biden's search for Treasury Secretary. Bloomberg sources say the more provocative option of Senator Elizabeth Warren hasn't been ruled out, but is far less likely. Brainard is seen as a choice that could be universally accepted by Wall Street and progressives. One source said she was more interested in being Fed chair. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the official global death toll for COVID-19 is nearing 1 million, but the real tally may be much higher. Public health expert Alan Lopez believes it may be closer to 1.8 million and could hit 3 million by the end of the year. Now, in Europe, cases are rising. In Germany, the number of new infections hit an April high. Well, joining us now this morning is James Athey. He's investment director at Aberdeen Standard Investment. James, thank you so much for joining us on Bloomberg Surveillance. We'll talk about stimulus in the U.S., but does an extra stimulus really kind of, stave off concerns about these rising infections in Europe?
Morning, Francine. I mean, from a market perspective, yes, potentially, rising virus infections alone are not necessarily something that the market has to aggressively react to, but to the extent that we get further lockdown measures, and that really does go back to a period of heavy economic disruption. That obviously is something which markets are not priced for, certainly not a lot of risk markets. I think obviously bond markets have predominantly been pricing a rather negative outlook throughout. So of course, if that economic disruption is in some way ameliorated or offset by some fiscal stimulus, that is also something that the markets will have to take into consideration. But to be honest, these kind of fiscal measures, they really are just stopgaps, and they're certainly not dealing with some of the underlying damage which is occurring to economies here. Governments can pay to have workers remain attached to companies, but if those companies are struggling for profitability, even as we get through the worst of the virus period, then those workers may not remain attached in the medium to long term.
So do you worry about consumption taking a hit quite quickly and aggressively?
mean, that really does depend on the extent to which we see, more draconian, more aggressive lockdown measures. I have to say I'm surprised that we are still dealing with some of the quite heavy-handed, quite aggressive lockdown measures. I think some of the cases where, there's been greater success with dealing with the virus, and certainly thinking about the long term, have not necessarily been accompanied with some of these measures where the full costs, both in economic terms and social in terms and in broad health terms, really are not well understood or well known, and I don't think are necessarily being brought into the conversation. So I have been a little surprised at some of the measures we continue to see in a number of places. But of course, whatever that is the case, that's what's going to be driving the market reaction.
But this is what you mean, the leisure industry being hit hard, James, or something else?
Yeah, well, and of course there are specific industries which, to all intents and purposes, can't really operate in this environment, and that really does become a specific issue for those industries and for companies operating in those industries, and again weighing up the medium-term damage that will occur from shutting out complete sectors from being able to participate. It is a very, very difficult economic calculus, and of course that makes it a very difficult political calculus. But I think now we should be at a stage where we should be thinking more about the long term and how we can, to some degree, live with this virus, because it does appear that vaccines, to the extent that they will be widely available, we are still talking about maybe as far as 6 months before they're widely available, and that's a long time to continue with such heavy economic disruption.
What does it mean for the markets, James? Where do you see value right now?
That's a good question. The frequency with which I'm asked about value is so difficult. I mean, there is, again, to repeat myself, unfortunately, there is no value, really. It's very difficult to find what you would truly call value in this kind of environment, because assets across the piece are expensive, and expensive all at the same time. And that includes, government bonds, the asset class I look at. There are reasons for a lot of the expensiveness that you see, and that doesn't mean that things can't get more expensive. But what are the market implications? Well, I think, the last week we've seen that positioning and sentiment really had shifted really dramatically to a very risk-facing, a very positive outlook. And I'm not sure that the reality calls for such a positive outlook. And what we're seeing really in policy terms, I think, is some caution from the Federal Reserve, certainly not a willingness for the ECB to act immediately. The Bank of England really talking down, again, negative rates, almost central banks stepping back a little bit, really trying to apply some pressure to fiscal authorities. And the position that the governments find themselves in is that they're already, in incredibly stretched circumstances with respect to their own balance sheets. And so there seems to be a bit of an air pocket for new stimulus just in the short term. And so couple that with bad news on the virus, and it feels like maybe risk could continue to wobble for a period. That really, it doesn't change how we are positioned or have been positioned. We've been pretty cautiously positioned throughout this. We continue to favor safer FX and running long duration positions.
James, thank you so much. James Athey there from Aberdeen Standard Investments stays with us. Now, coming up, U.S. House Speaker Nancy Pelosi and Treasury Secretary Steve Mnuchin say they are ready to resume stimulus talks. We'll discuss that next, and this is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get to the Bloomberg Business Flash, rather. Here's Leanne Gehrens. Hi, Leanne.
Hi, Francine. A judge has ordered the US to postpone its ban on TikTok or to respond in court today. It comes as ByteDance is seeking an injunction to temporarily block the ban as it continues to pursue a deal with Oracle and Walmart. The ban was set to take effect just before midnight on a Sunday. Palantir plans to go public next week, and Dow Jones is reporting its expected valuation is almost $22 billion. In 2015, investors valued the company at $20 billion, but as recently as this month, PitchBook valued it at less than half of that. Palantir has declined to comment, and Amazon is driving into the new and hotly contested market for streaming video games. Its Luna Plus service will cost just $5.99 a month during the introduction period. It'll let gamers play without shelling out for expensive consoles. Amazon also introduced new spherical models of its Echo and Echo Dot speakers. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, U.S. House Speaker Nancy Pelosi and Treasury Secretary Steve Mnuchin say they are ready to resume stimulus talks. House Democrats are drafting a $2.4 trillion proposal, but Donald Trump has indicated he'd only be willing to go as high as $1.5 trillion. Meanwhile, Goldman Sachs says markets are overestimating the risk from election results delay. Well, economists Michael Cahill and Alec Phillips says it seems fairly likely that the market will be able to gauge the likely winner, even if the Associated Press does not call the race. Well, still with us, James Athey from Aberdeen Standard Investments. James, I'll talk to you about stimulus in a second, but first of all, what is the market pricing in, or what is the market prepared for, come November? Are they already pricing in no clear winner, or are they pricing in a second-term President Trump?
Yeah, that's a really good question. It's one we've been asking ourselves, and I think really we're struggling to draw too many high conviction conclusions. I think first and foremost, it's somewhat difficult to gauge what the market reaction should be in some of the potential election scenarios. I think you might say a continuation of President Trump's time could be good for risk assets. He certainly favors low tax, and certainly he wouldn't be rolling back his own tax cuts, which boosted risk. On the Biden side, he maybe would be unwinding some of the Trump tax cuts, specifically corporate tax, but maybe he would be more supportive on fiscal policy, and maybe that's good for risk assets as well. I think potentially a Biden presidency with a split Congress, where really I think a Republican Senate would be desperate not to give the president much in terms of political and policy wins. Potentially that's the most disruptive. I don't think that's what's priced at all. I think the market, if anything, is expecting the blue sweep, really, and so a Democrat presidency, a Democrat Congress, and I think the market sees that as, broadly speaking, a decent environment for a continuation of what we've seen, which is loose fiscal and loose monetary policy.
James, what are you expecting in terms of stimulus from the U.S.? And depending on the figure, how much does it move markets?
Sure, yeah. I mean, I think now virtually nothing is expected. So any agreement on a renewed fiscal stimulus before the election, I think, would be a positive, would be a boost for risk markets. What am I expecting? Well, the fact that the Treasury Secretary and Nancy Pelosi are prepared to get together is obviously positive. Is that really, though, the most meaningful movement forward? I think obviously there are more fiscally conservative members of Congress, certainly in the Senate on the Republican side, that might not be prepared to agree so easily. Certainly, again, in election season, where these people's seats who are up for re-election, they will be campaigning as fiscal conservatives, and it's quite difficult for them to then go back to their electorates and sort of give that message in front of this election if they've just agreed to yet more fiscal stimulus. So I still think the politics is the issue here. So close to an election, with fiscal conservatives needing to really sort of burnish those credentials. So maybe something can be done. I think 2.4 trillion sounds too big at this stage. I think maybe $1 trillion would be as big as I could imagine in front of the election. But even if it was only that size, I think that would still be good for risk markets.
James, what about some of the support measures that we heard from the Chancellor in the UK yesterday? Are they enough to keep this economy on a stable footing at least?
Yeah, very difficult. I mean, they're definitely considerably smaller than what was in place previously. Just the fiscal costing in terms of what the government expects to pay for these measures is very, very much smaller than what had been the case previously. I mean, what we've seen, broadly speaking, with some of these fiscal measures, certainly the ones which are going directly to sort of Main Street, if you like, to the average person, is that some of it is being saved. And obviously that's not economically supportive in the short term. It may well be economically supportive in the medium term. So there is an argument to be said that you could reduce the size of that stimulus without having a huge economic impact. But it's really difficult to say. I think to the extent that people aren't able to consume at a subsistence level because they're not working, that there's no question that the government in this environment needs to be stepping in and assisting those people. Where that line is, what the right amount is for that, I have essentially no idea. I think that's very difficult to do. I think, what we'll see from the UK economy is much like other economies. It will tick along okay without looking spectacular. We will still be seeing some sequential benefit from the fact that we've moved from closed to open, and people are just becoming more accustomed to dealing with the disruption that we're seeing, and therefore I think consumption patterns and behaviours will settle down somewhat. But over the medium term, even with fiscal support in place, I still think there are huge challenges for all of the developed market and emerging market economies.
James, thank you so much. James Athey, their investment director at Aberdeen Standard Investments. Now, the U.S. election coverage, of course, continues right here on Bloomberg TV. Make sure to tune into our special coverage for the first presidential debate. That's on September 29th. More on that next. This is Bloomberg.
There's a lot of terrific talent out there.
I'll say it again, it is not a pipeline problem.
What we hadn't looked at is promotion equity, right, or promotion parity. So that was one of the big things that we went and looked at it. And we made a huge amount of progress and had, a much higher percentage of our African-American Black employees that have been promoted in the last 6 months as a result of this.
How a manager or a leader has done with respect to our DEI initiatives and the diversity on their teams and their ability to make a difference in this respect is going to be an important element that we formally said is a part of promotion decisions and formally a factor in compensation at year end.
You have to start younger. You have to build the mass at the base to try and get leaders 5 or 10 years from now.
They already realize that they cannot stay where they are, that they're going to have to move because society is pushing them to move.
This isn't a nice to do, this is an absolute business imperative.
Those were a number of business leaders speaking out against the idea that there is a lack of Black and ethnic minority talent for top roles. Well, executives speaking at the Bloomberg Equality Summit distancing themselves from the controversial comments made by the Wells Fargo chief executive on hiring Black talent. Now, Citi will spend $1 billion on efforts to help close the racial wealth gap over the next 3 years. That's as the U.S. banking giant seeks to become a more anti-racist institution. The announcement comes alongside a report that the U.S. has lost $16 trillion due to the racial gap. Now, for more on all of this, Sri Vidya Bhaktavasalam, our managing editor for finance and investing, joins us now. Sri, so first of all, good morning to you, but what are the concrete steps that Citi is taking?
Good morning. So as part of this initiative at Citigroup, the $1 billion that they've earmarked for people of color and minority customers, more than half of the funds will go towards supporting home ownership. As you know, the home ownership gap in the U.S. and indeed in many parts of the world, it's very starkly divided along racial lines. So part of this will go towards developing a pipeline of affordable housing by minority developers, as well as supporting mortgages and other financing that will help people of color own homes. The other part, some part of the money will also be earmarked for Black-owned suppliers, procurement opportunities, and other such opportunities for them.
Shri, so what exactly does the report find, and where will we be in 6 months from now?
Well, 6 months is probably not going to move the needle very much, but over the next 5 years, the Citigroup report found that the U.S. could end the most severe forms of economic discrimination, and it could give a $5 trillion boost to GDP over the next 5 years. And so, they're very much viewing this as a step in the right direction, and over the next 5 years, the differences could be profound, given that, what you cited with the 16 trillion in lost GDP, that, we know that race-based inequalities have really shaved off that kind of amount from GDP, with lost wages, fewer opportunities for college and higher education, less access to home ownership. All of these things will start to make a profound difference.
All right, Shri, thank you so much. Shri Vidya Bhaktavasalam there with the very latest on this important issue. Now, coming up, another virus wave hits Europe with record infections in the UK and France and rapidly rising hospital admissions in Madrid. We'll discuss the science with Professor Paul Hunter from the University of East Anglia. And of course, along with the science is also this very difficult, idea that you need to try and not kill the economy off. So one of the things that we will also be focusing on is targeted lockdowns, as we have these record virus cases in the UK and France really heightening some of the strains in Europe. We'll also look at Brexit, the reality that comes with that, and we talk to a COVID scientist next. This is Bloomberg. day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The official global death toll from COVID-19 is nearing 1 million, but the real tally may be much higher. Public health expert Alan Lopez believes it may be closer to 1.8 million and could hit 3 million by the end of the year. Even in countries with sophisticated health systems, mortality details are difficult to correctly gauge. Republicans are pushing back against President Donald Trump's refusal to commit to a peaceful transfer of power. Senate Majority Leader Mitch McConnell tweeted, "The process will be orderly, just as it has been every 4 years since 1792. The Senate also agreed to a resolution reaffirming its support for a peaceful and orderly transition of power. And Kentucky's governor is urging the state's attorney general to release information about the fatal shooting of Breonna Taylor. It comes after a grand jury chose not to file murder charges against any of the police officers. That decision has sparked protests in Louisville, including the shooting of 2 police officers. One has been released from hospital. The other is in a stable condition. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now let's get the latest on the second wave of coronavirus infections currently hitting Europe. Yesterday saw more than 16,000 new cases in France and over 6,000 in the UK, both record daily reported figures. Now, meanwhile, in Madrid, high case numbers have started showing up in the city's hospitals, with the share of intensive care beds occupied by virus patients jumping almost 40%. Russia, Germany, and the Czech Republic are amongst countries also recording a spike in new infections. Well, joining us this morning is Paul Hunter. He's professor in medicine at Norwich Medical School. So, Professor Hunter, thank you for joining us. Is this time a bit different to March? Because, first of all, do we know how to treat it when people end up in hospital? And in general, people are wearing more masks. We're much more aware of this disease. So, is a second wave, will it be somewhat more subdued?
Well, it depends how you measure that. In terms of the total number of reported cases, I think we're likely to see it dwarfing what we saw in March, April. Hopefully, we won't see quite as many deaths and fatalities around Europe as we saw in the spring. And there are a number of reasons for that, mainly because the epidemic is now spreading in a lot more younger people than was the case in the spring, and younger people generally don't get very severely sick and certainly very rarely die. So that is the main reason why we're not seeing as many deaths, despite the greater number of reported cases. Also, but you are correct, we are better at treating them, and the use of dexamethasone to reduce the risk of death in people who are particularly seriously ill was a real step forward in our understanding of the management of severely ill cases.
Professor, I keep on reading, and I'm not a virologist and I'm not a doctor, about something called interferon, which is basically what helps orchestrate, that basically helps orchestrate the body's defenses. I mean, is this crucial that we understand, interferon, so that we understand why some people get very sick and others don't?
Well, I think there are lots of reasons why some people get very sick and others don't. Interferon is as you quite say, a really essential part of the body's immune defense mechanisms. In fact, people are at the moment trialing the use of interferon as a treatment for COVID-19, but as far as I'm aware, so far there haven't been any strong results published about whether or not it is or isn't effective. It may well be, but we can't jump the gun on treatments until we've shown that it really does work. Other main reasons why people get sick, people who have pre-existing diseases get more sick. If you've got diabetes, you're more likely to get sick if you've got chronic lung disease. Also, we do know that it seems to cause more serious illness in people from the BAME community, and also in all of us as we get older, and of course in men rather than women.
But do we know how to treat it differently then, Professor Hunter?
Well, as I said, we are able now to know the value of dexamethasone in treating it. We have actually, and that has made a big impact. That probably reduces the death rates by about 20 to 25%. We are better. In any epidemic such as this, doctors and nurses get more of a feel for how to manage people better as the disease epidemic goes on, as they build experience, and there will also certainly be some of that. But we're still not yet we still don't yet have a drug that really is effective early on in the treatment that will stop people early on in the disease that will stop people going on to develop severe illness.
Is the virus mutating at all?
Well, it is changing, yes. None of those mutations seem to have made a lot of difference. One of the mutations that happened some time back seems to have become more infectious and seems to have spread the infection more widely and replaced many of the other strains. But there is no evidence that mutation makes the virus either more lethal or less lethal than what it was right at the very start.
Professor, are you confident that actually we'll get a vaccine that works? And will it make a difference if people have it, whether it's one dose or multi-doses?
Absolutely. I mean, I'm actually quite optimistic. I know we're not there yet, and so nothing is certain until we see the results of the phase 3 trials. I'm optimistic we will have a vaccine. Almost certainly, the vaccine won't give you lifelong immunity. And if you're in a risk group, if you're at risk of more serious disease, you almost certainly will need to have you'll need 2 doses now, and probably a dose a year for some time to protect you. The vaccine may not actually stop you getting the infection. It may just stop you developing severe disease, but we need to wait and see what the results of the trials are before we know for certain.
When do you think we'll have a vaccine? And would you be 100% comfortable in taking it? How can we be absolutely certain that it is safe?
I think we already have a lot of vaccine candidates that are going through various stages of trials. Once the vaccines have been through the phase 3 trials, which are actually very large trials, and they're there to show that the vaccine is safe and effective. And once a vaccine has passed through the phase 3 trials successfully, I will tell you, I will be as far to the front of the queue for the vaccine as I possibly can.
Professor Hunter, there seems to be a lot of confusion on whether asymptomatic people, shed enough virus to really infect a lot of people. And at the moment, given UK guidance, we're just not testing people that could be asymptomatic but exposed to someone who's had COVID. What's your take on that?
Yes, I mean, that is the case. The issue of people who are truly asymptomatic, whether they're infectious, is still not absolutely clear. We do know that people who will eventually become symptomatic can be infectious maybe a day or 2 before they develop symptoms. Proving that for asymptomatic people is quite difficult. The problem, though, if you're going to test large numbers of people without the infection, any any test, laboratory test, has a small number of false positives as well as false negative results. And when in asymptomatic people where the prevalence of the infection should be very, very low, you may start getting false positives. The other thing, when it's very low, those false positives might actually be more common than the real positive. And the other thing is that when you do have an infection, whether it's asymptomatic or symptomatic, you do shed the virus for a long time, even after you've not become infectious. You've shared virus that's incomplete in small quantities that the throat swab test will pick up, but it doesn't necessarily mean that you're actually infectious. So it's very difficult to interpret, to know what to do about positives results in asymptomatic people. The large majority of those positive results are almost certainly going to be non-infectious.
Paul Hunter, thank you so much, professor in medicine at Norwich Medical School. Now, coming up, estimates suggest that Africa is responsible for just 0.01% of historical carbon dioxide emissions. But how can countries ensure rapid economic growth that is also sustainable? We'll talk green bonds next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Colony Capital is selling nearly 200 hotels to hospitality management company Highgate. It is part of the firm's shift away from traditional brick-and-mortar properties. The deal is valued at $2.8 billion. The vast majority is Highgate assuming debt. Hospitality is continuing to struggle due to the pandemic. A judge has ordered the US to postpone its ban on TikTok or respond in court later. It comes as ByteDance is seeking an injunction to temporarily block the ban as it continues to pursue a deal with Oracle and Walmart. The ban was set to take effect just before midnight on Sunday. And Amazon is diving into the new and hotly contested market for streaming video games. Its Luna Plus service will cost just $5.99 a month during the introduction period. period. It will let gamers play without shelling out for expensive consoles. Amazon also introduced new spherical models of its Echo and Echo Dot speakers. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now let's focus on green finance. According to the Africa Finance Corporation, the continent is responsible for just 0.01% of historical carbon dioxide emissions. Despite this, the region looks set to be disproportionately affected by the climate crisis, with droughts and cyclones becoming more commonplace. So how can countries ensure rapid economic growth that is both green and sustainable? Well, joining us now is Somalia Zubairu, Chief Executive of the Africa Finance Corporation. Thank you so much for joining us. Somalia, when you look at some of the targets being put in place to cut carbon emissions, one of the questions that we keep on hearing is, should developed economies and emerging economies be treated differently? What would you say?
Clearly, we should be treated differently, and I'll tell you why. So, we are clearly the hardest hit by the impact of climate change, even though we're the least contributor. And we clearly have other challenges to deal with. So, for example, we have cases of extreme poverty on the continent. We have a growing population that requires jobs. And we have a lot of resources that require development. The development of these resources will create those jobs for Africans. And if we also do more production and processing of our commodities on the continent, we would also be mitigating the effects of climate change. And I tell you why. So the way we currently trade with the world is we have several commodities that are produced here, and they are exported to the rest of the globe for processing. So, for example, you mine products here and you ship them to China or to Europe. That voyage, and the frequency of that voyage leads to carbon emissions and greenhouse gas emissions. When you get to those locations in Europe or Asia, they are likely going to be processed by coal-fired plants, which would further increase carbon emissions. But if you do the processing in Africa, you're going to use renewable sources of energy like hydro dams, solar, and wind for processing. You create more jobs on the continent. So it is important that we focus on development on the continent that creates jobs for Africa's growing population. Don't forget, these same people are the ones that, if they don't have jobs here, they emigrate to Europe. And they cause migration crisis for you in Europe. So it's important to find a way of keeping them here in Africa with jobs in Africa.
Somalia, so what's the best way of financing this, right? Is it through green projects? And is this wind, solar? Is it infrastructure? And where would the funding come from? Is it, a partnership between public and private money?
It's a combination of all of the things that you've mentioned. So we clearly are focused on infrastructure development and improving the operating environment in the continent. We do that because we know that the absence of infrastructure reduces our productivity by up to 40% and deflates GDP growth by 2%. So focusing on investments for infrastructure and industrialization is what is required. We have access to markets. We recently priced a green bond on Monday at 1.205% coupon. We had done a green bond in June for $700 million at about 3.25% yield. So programs like this and a partnership with investors across the globe for investments in Africa is what is required to move the dial. And also for, I would say, more better terms of trade with the rest of the world, which individual countries will have to negotiate by themselves, and they're doing that currently. There just needs to be a consensus that Africa needs to be supported with investment and not aid.
Somalia, do you have a ballpark figure of actually how much money would be needed to kickstart some of the big projects in green finance that would put Africa on a better footing?
So, all the data we get indicates that we need $20 to $30 billion annually for climate mitigation and adaptation projects. And that is the region of investment that we look at. But if we're looking at infrastructure more broadly, we're looking at about a requirement of $170 billion annually for building new projects and maintaining what we have. Most of that need is in water and sanitation, where over $60 billion is required. Energy requires an investment of about $50 billion. Transport and logistics about $47 billion, and ICT requires about $7 billion. We are able to mobilize currently about $100 billion of investments in the continent, leaving a gap of about $70 billion. So what we need is more private sector investments, and we need a coalition of investors to work with us, because what we do here is we de-risk opportunities and we invite other people. I'll give you an example. We're building a wind farm in Djibouti, where we de-risked the opportunity and invited FMO and Climate Investor One to work with us. And so we can replicate that in several other areas. We're building refineries that process crude oil and prevents the import of crude oil from other parts. So that also requires financing, and we could do with partners. We're building industrial zones that enhance the value of commodities, increase value addition of the continent, and create jobs. We could do with capital in that area as well. So there's several projects that we're working on as AFC, and we're looking for partners to work with us.
Great. Thank you so much. Somalia Zubairu, the Chief Executive Officer of Africa Finance Corporation. Now, coming up, more from our exclusive interview with Johan Lundgren, the Chief Executive of EasyJet. That's coming up next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
There is a case to say that the situation that we are in and the consequences of the government-associated policies on the restrictions for travel, that is a result of the pandemic, which we clearly all accept, has an enormous effect that you can't expect the industry to be able to cope and to handle with. So I'm not against that support. And what is not good at all and what is not acceptable is that it's so differently and unevenly distributed. So you can, if you take EasyJet as an example, going into this crisis as one of the world's financially strongest airline, And because we are not in that, desperate need to get the funds to survive here next week or next month, might not be seen as a case who is in need of that. And the same thing goes for a number of other companies also in the UK, where these billions has been, poured into a number of other airlines. That distorts the market and that distorts the competition. And that's what I'm against.
We spoke to a professor the other day on Bloomberg TV, and he talked about EasyJet received a massive handout. On what scale do you think you do need assistance? I am sure you would push back against that very, very strongly. And you've only got to look at the arithmetic in terms of the amounts that are being received by the likes of Air France, KLM and Lufthansa and compare them with what the UK carriers receive to see the gulf that exists between the two. But on what scale do you need assistance?
Well, first of all, that's a very ill-informed decision. You should not make comments about these things if you don't know the facts. I mean, the case is that there are a number of flagship carriers who received, if you divide the support versus the revenue, some up to 38% on it. We received, less than 10%. So we've been getting access to the CCFF scheme, the 600 million, which was available for all companies who had a credit rate investment. And you would also know that there are companies in there doesn't pay UK corporate tax, who has less than 100, couple of hundreds employees versus EasyJet's 8,000 employees in the UK also at scheme. So we think it's unfair. And then we also have had the furlough, which has been very helpful, I should say. But the matter is that it is the difference in the scale that is the concerning part. So, what would we be looking for? Well, we would like to see that there's, first of all, is a general support package for the industry. But this is not only enough in terms of just the removal of the APD and also the ATC charges. We would also need to have a much more refined quarantine system. We will also need to make sure that testing is introduced, because that would also bring confidence back into people to fly. A testing system will not replace a flawed design on the quarantine system, but if you had a much more targeted, risk-based approach when it comes to the quarantine, you could introduce the testing into the higher risk areas. And that needs to happen at the same time that the supports come in to the whole of the industry. But we can't rule out that there also needs to be, specific support coming into companies such as ourselves, also in the UK.
That was EasyJet Chief Executive Johan Lundgren speaking exclusively with Guy Johnson from the World Aviation Festival. Now, we'll have plenty more on the markets. A lot of the focus on the markets is on the extra stimulus that we could get from the United States. So certainly both sides are willing to talk, and that's giving a bit of a lift, although we're off the day's highs here in Europe. Bloomberg Surveillance continues in the next hour. Tom Keene joins me out of New York, and we'll be having a lot more conversations on the airlines industry. This is Bloomberg.
day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television. The new wave. France and the UK report record daily virus cases. Britain's Chancellor warns of an unemployment tragedy despite extra support. The trillion-dollar gap. U.S. Democrats draft a new $2.4 trillion stimulus bill as Mnuchin says he's ready to talk. Markets struggle for direction. And Republicans push back on Trump's threat to defy the election results. Goldman says markets are overestimating the risk from delayed results in the presidential election. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lachman in London, Tom Keene in New York. Tom, it's Friday. The markets are moving, but actually they're struggling for direction as they look at the stimulus in the U.S., but they're also looking at the number of infections rising here in Europe.
You nailed it on the opening, Francine. It is really directionless. I'd note Swiss franc weaker. We'll get to that in the data check, but it's a real struggle of a Friday. And Francine, within all of this jumble to the debate on Tuesday, there's only one story percolating right now, and as you mentioned, that is the redo of the stimulus. Can Speaker Pelosi, under huge pressure, actually jumpstart the stimulus talks? A lot of people saying that's iffy.
Yeah, so that will, of course, filter more onto the markets. Let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. Republicans are pushing back against President Donald Trump's refusal to commit to a peaceful transfer of power. Senate Majority Leader Mitch McConnell tweeted, "The process will be orderly, just as it has been every 4 years since 1792. The Senate also agreed to a resolution reaffirming its support for a peaceful and orderly transition of power. House Democrats have started drafting a new stimulus proposal of roughly $2.4 trillion. The plan could get passed by the House next week. While smaller than the package the House passed in May, it's still much larger than what Senate Republicans say they can accept. President Donald Trump has indicated he'll go as high as $1.5 trillion. Over in the UK, rebel members of the Conservative Party are threatening to seize the power for Parliament to block new coronavirus rules. At least 40 Tories have put their name to an amendment, all but wiping out the government's majority on the issue. It comes as the Commons is due to review the government's pandemic legislation 6 months after it was enacted. The move would still need opposition backing. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities, a bit of a disorder here. We are not at correction level on S&P 500, 3242. Futures up 4. We're just beneath it, 9.4%, 9.6%, depending on what mark you take on a daily chart. Yields go nowhere. I'll let Pharaoh tell you about that through the morning. But what's really interesting to me in foreign exchange, safe haven ebbs away with Swiss franc, Euro Swissy, with the euro gyrations from a 107 out to a 108.05. That's a little bit of note. Swiss franc weaker. Francine, can you tell I'm struggling here? I mean, I'm just not getting it done, am I?
Well, it's a Friday feeling, Tom, and actually for the first time, you know, there's so much news, and actually markets seem to be a bit all over the place. Today, they just seem to be taking stock about what's going on, right? So you see the dollar slipping, maybe cutting into the best week since April, but, you know, they're just kind of moving sideways. Investors weighing the weak prospects of this American stimulus to counter the global uptick in coronavirus case, and I think that kind of encapsulates, you know, the struggle for a lot of these markets. Now, talking about the markets, the stimulus, the infections, is Christian Muller-Gleesman. He's Goldman Sachs Managing Director of Portfolio Strategy and Asset Allocation. Christian, thank you so much for joining us. Are we going to see markets that are a bit range-bound until the U.S. election?
Yeah, morning. I think you're right. You might remember last time we spoke, we said kind of entering the summer that we might be stuck in a bit of a fat and flat range, we called it at the time. And I think that's been pretty much the case. I mean, clearly the U.S. had a quite phenomenal summer, but part of that has unwound. I mean, to the earlier comments, the S&P is entering correction territory, but if you look at the Stock 600, you're only down 4.5% from the peak in June. So I think like the U.S. has been a bit of an outlier because of the tech rally you had in August, but net you've been pretty fat and flat, and I think it's unlikely you're going to break out of this range until the market is embracing the transition from policy support to actual growth recovery. And the problem is this transition is very difficult right now because not only are you seeing a second wave in the viruses in Europe, and also kind of the vaccine news flow, as you were mentioning, is getting a bit more challenging. But you have on top of that the fiscal and monetary stimulus at the margin disappointing. You had the fiscal side into year-end disappointing. You had the Fed at the margin disappointing, and on top of that you have the U.S. election, which a lot of people are worried about, not necessarily with regards to who wins only, but with regards to it becoming a process that even further delays the potential for decisive stimulus, and I think all of that means that near term I think you could continue to have a quite volatile range. We would, however, be surprised if we get to a kind of bear market type correction territory, considering that at the margin the type of shocks and uncertainties we're dealing with are much lower than what we had at the beginning of the year.
But, Christian, so what does that exactly mean? That even if we have a stimulus between, you know, the Democrats and the Republicans right now, unless it's a big figure, it won't move the market so much?
I think it will definitely move the market in the sense that it's been contributing to concerns. The way I think about it is the VIX is at 30, and it's not only at 30 for the elections, it's more or less at 30 kind of going into next year, which means there's a lot of uncertainty risk premium currently baked into equities and possibly other markets. And as a result of that, any type of reduction of uncertainty can help the market. There's no complacency. I think markets are kind of in a cautious mood. So fiscal stimulus can get that risk premium down, but it's unlikely to be the trigger of that kind of more sustained and more powerful rotation towards growth across and within assets. I think that really requires, in our view, a vaccine announcement and more clarity on the timing and availability on a vaccine. And related to that, it requires the election outcome probably, because people want to fade that as well, because that gives you a lot of sense of the type of fiscal stimulus beyond like the near term.
Christian, I got like 8 questions here on a Friday to reset into Q4. And on asset allocation and frankly derivatives and correlation, I just need to say, how do you handle the nominal bond yield? I mean, the yield is so low. What's the strategy forward in full faith and credit bonds?
Yeah, it's the big kind of soul-searching exercise the multi-asset industry is going through right now, because we've all benefited from the Treasury as a safe asset, and even the European and Japanese and Asian multi-asset funds were using Treasury yields, and by extension gold, because gold is very correlated with Treasury yields, especially the real yields. And it seems like this diversification benefit, which is kind of like, it was like a free lunch, no? Like diversification is one of the only free lunches in in finance, that is disappearing. And what we're seeing currently in conversations is really two directions are emerging. One of them is where people just say, over the next cycle, in my multi-asset portfolio, I probably need to own more equity. That means more risk. So either I manage that via market timing or options more aggressively, but that's the one direction we're going, more aggressive equity allocation. Most of the clients we speak to are actually not 60-40 or 50-50, especially in Europe, the equity allocations are probably much below that. So at the margin, you see a bit more shift towards strategic allocation, more in equity. But also we see a completely other direction from some clients where they say the new 60-40 might be 50-30-20 or 40-30-30. Or in other words, you scale down both equities and bonds and you invest in something completely new. Illiquid assets, real estate, real assets, alternative risk premia, carry, and they try to go down that route. But as of now, to be completely frank, there is no answer. I think we've seen 30 years of bull market in balanced portfolios, and I think it's unlikely that from the current starting point, it's easy to repeat that.
You're Jan Hatzius, and folks, Jan Hatzius will be with us later on Bloomberg Surveillance. Really mark down your Q4. Where's nominal GDP, and with that, the expected equity return, given the new realities of Q4, Q1, and Q2 growth next year? I mean, the bottom line is we're ratcheting down nominal GDP. Do we need to ratchet down our expected return?
Yeah, I mean, Jan and the team, they downgraded the fourth quarter from 6 to 3%, and also next year came down a bit, but we're still significantly above consensus coming into next year. And I think equities, as we know, are forward-looking. So I think there can be a significant disconnect where growth in the fourth quarter might disappoint quite a bit, but equities will look towards next year and this kind of big kind of growth acceleration which you might see. And I think what's important, which we've highlighted a few times, is that in this fat and flat period since June, cyclical assets have actually not priced in the improvement in the data so far. Or in other words, we have the ISM at 56. It might dip a bit, but at the margin, the last 3 months, most cyclical assets haven't even priced that increase to 56. So there's a bit of a cushion for a double dip in the data. So the question is really how deep that dip will be and how much the market will be willing to shrug that off and focus on next year, where I think most people agree that the vaccine is likely to come. The question is really the timing and availability, which people struggle with.
Christian, thanks so much. Christian Muller-Gleesman of Goldman Sachs stays with us. Now, coming up in the next hour, Michael Spence, Nobel laureate and General Atlantic Senior Advisor. That is coming up at 6 a.m. in New York, 11 a.m. in London, and this is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
About 11 million jobs have returned, but there's still a deep hole.
We could start to approach an unemployment rate certainly below 4%, say 3.5% to 4%.
I think that it is likely that more fiscal support will be needed.
And so, yes, additional fiscal support will likely be needed.
I do think small businesses would benefit from more PPP support.
A lot of that is going to depend on how well we manage this virus, fiscal policy, and a whole range of other decisions.
I don't think there's as much of an imperative about a new fiscal package as there might have been, in July.
I don't know who put that thought together. I mean, there it is. Back to, it was a little snarky there. Fiscal support will be needed. Boom. Fiscal support will be needed. Boom. That seems to be the message from our good public servants, and we particularly thank the Vice Chairman for appearing with Bloomberg Surveillance this week. What a lot of talk for central bankers, and of course it devolves down to the market guest. Christian Muller-Glissman is with us with Goldman Sachs. Really quite good math work as well, quantitative work across asset allocation. Christian, I want to talk here about the correlations of the market. Are they normal?
No, I think like right now you're dealing with much more risk in your portfolio than normal. I think like you might have noticed that in the last sell-off, in the last few days, like gold actually sold off alongside the S&P and alongside tech. And I think that is a new situation we've really dealt with since the summer, where real yields are moving much more cyclical than they used to, because these break-even inflation expectations, they are currently one of the most kind of correlated parts with growth expectations. Yeah, so that's quite unusual that break-even inflations would be as closely linked with growth, whereas the nominal yields are not moving, which means the real yields become like the kind of plug. So with kind of declines in inflation expectations, you push up real rates.
Is that really what has shifted this week, given what we just heard from Fed officials, which is there's a new shift down to just simply lower aggregate demand, slower economies, and the fact we have to deal with it into 2021?
No, I think that is it. I think like you've seen the break-even inflation decline from kind of 1.8%, the 10-year break-even, to 1.6 or so, and you had this period of extreme kind of optimism around the Fed with the average inflation targeting in the summer, and that's unwinding right now. And partially it's exactly as you said, because there is a realization that the aggregate demand picture remains structurally and cyclically still very challenged. So this decline in inflation expectations pushes up again the real yield, and that unwinds some of the strong performance of assets that are linked to that, which are tech and gold. But unfortunately, literally every asset suffers from higher real rates, especially if they come without growth. And that means like right now, these higher real rates are the biggest threat to your portfolio. If you get a continued increase in those, you will have most assets in your portfolio do quite poorly. One of the only assets that does well in these scenarios, which we've seen, is the dollar, because it's an unwind a bit of some of that dollar weakness, which is very closely linked to real yields.
So what does dollar do, Christian, after the election, depending on who wins?
Yeah, it depends a lot on who wins. But I think, as I said, one of the most important things coming out of the election will probably be uncertainty reduction and clarity, hopefully. I mean, markets are very worried that it will not immediately drive uncertainty relief, but our hope would be it will. And that should normally make the market more confident to embrace a more pro-cyclical view. And that should generally be consistent with a continuation of dollar weakness in line with the trends we discussed, that should also push down real yields and push up break-evens again. So I think the elections, full stop, irrespective of who wins, should be uncertainty reducing. But I think our rates team has said that at the margin, if you do get a Democratic sweep, that could push up rates a bit more because of the expectation that they could push through more fiscal stimulus. So at the margin, like a Democratic sweep has the potential to drive a bit more pro-cyclical rotation maybe than the other outcomes.
Christian, when you look at some of the unknowns and some of the lockdowns, is there a danger that actually inflation surprises us 18 months from now?
18 months from now is quite far out, and I think certainly the probability distribution around inflation has widened materially in this crisis because we have all this, on the one hand, all this fiscal and monetary stimulus, but also a lot of supply destruction, a lot of deglobalization trends. So that's like the further out you look, the more uncertain the inflation picture gets. Right now we have so many disinflationary forces, it's not easy to kind of be worried about realized inflation picking up, but especially when you come into next year, there are two things worth watching. The first thing is the oil price, and our team still think that 65 is kind of the level we might get to in 1 year. That normally always has a quite inflationary impact and kind of knock-on effects to other things in the basket. But I think the other thing worth watching is like literally specific supply bottlenecks. I mean, you know, in the core CPI print in the US, you had the used cars driving a bit of an upset surprise. I think it's possible that you get more and more of that. But the good news about that is it should be not a global phenomenon. It should be quite local, and that means it should be diversifiable in the portfolio. No, what investors are always worried about with regards to inflation is this idea that it kind of accelerates on a really broad global basis and cannot be gotten under control, and that really hits the portfolio. And I think that risk, as of now, doesn't seem that high yet.
But then the money question here on the great underowned international equities is then do you go diversifiable over to international equities, and do they finally really pop and go?
Listen, I think that's exactly what worked in the 70s. Like, people often look at the 70s as the kind of nightmare scenario where you had stagflation, high inflation, weak growth.
Christian, disco was the nightmare scenario of the 70s.
But what you actually found is in the 70s, like US and European equities have been terrible, but Japan and EM actually delivered okay returns. So if you're worried about inflation in the long run, shifting a bit more international and shifting generally a bit more diversified across styles, sectors, countries makes a lot of sense because certain styles are more exposed to inflation. Clearly growth stocks and their linkage to rates makes them maybe a bit more vulnerable to significant increases in inflation. So I think generally the message we're giving is diversification will get more important. Yeah.
Christian, thank you so much. Great briefing here on a Friday to get us into Q4. Can you believe that, folks? We're talking up Q4 on this Friday. Where did this very difficult year go? Christian Muller-Glissman, he is with Goldman Sachs. Again, Jan Hatzius is to be with us here in a number of hours as well, the chief economist for Goldman Sachs. And what's so important here with Dr. Hatzius is a real markdown, a real tough call on where we are into December and into 2021. This is Bloomberg. Good morning. Futures flat.
the climate crisis is just staggering. But you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
As the presidential candidates enter the final stretch before the election, both are pitching their diplomatic experience, but with contrasting plans. Diplomats, ambassadors, and experts weigh in on the future of U.S. foreign policy on a Bloomberg special report, 2020 Year of Crisis, Diplomatic Divide, on Bloomberg Television.
Explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. A judge has ordered the U.S. postpone its ban on TikTok or to respond in court later today. It comes as ByteDance is seeking an injunction to temporarily block the ban as it continues to pursue a deal with Oracle and Walmart. The ban was set to take effect just before midnight on Sunday. And Amazon is diving into the new and hotly contested market for streaming video games. Its Luna Plus service will cost $5.99 a month during the introductory period. It'll let gamers play without shelling out for expensive consoles. Amazon also introduced new spherical models of its Echo and Echo Dot speakers. And that's your latest Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. Now, this is what stocks are doing at the moment. Now, they were rising on the hope that we would get some kind of stimulus in the U.S. Now they've actually turned, and European stocks have been fluctuating between gains and losses. If you look at what investors are looking at, a lot of it is, of course, the weak prospects for new stimulus, and that's coming into question, but that could counter the global uptick in coronavirus cases, Tom.
Very good. On the data, I'm looking at a Swiss franc a little bit weaker as well. On a Friday, it's typical that Francine Lacroix will have a case of Veuve delivered to Queen Victoria Street, or maybe a case of Moet as well. Shipping it in and coming up, an important discussion. LVMH, really the soul of the company on Moet and Hennessy. Laurent Boyat will join us. Really looking forward to this within a pandemic. This is Bloomberg. Good morning.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I know people are anxious and afraid and exhausted at the prospect of further restrictions on our economic and social freedoms. For at least the next 6 months, the virus and restrictions are going to be a fact of our lives. I cannot save every business. I cannot save every job. No chancellor could. The government will directly support the wages of people in work, giving businesses who face depressed demand the option of keeping employees in a job on shorter hours rather than making them redundant. These are radical interventions in the UK labour market. Policies we have never tried in this country before. We have so often spoken about this virus in terms of lives lost. But the price our country is paying is wider than that.
Well, that was the UK Chancellor of the Exchequer, Rishi Sunak, announcing measures to help businesses survive the winter. He warned that an unemployment tragedy is already underway as a second wave of coronavirus hits the UK. Now, to talk about this and some of the measures, the Chancellor's salvo to try and keep this chaos under control, we're joined by David Merritt, Bloomberg's News Senior Executive Editor. David, we live in London. You know, the Prime Minister clearly said that he had to announce restrictions that could be in place for 6 months. How does the Chancellor actually try and, save this economy from ruin?
It's a very difficult situation that they find themselves in. Lots of dismay at the very bleak forecast there. At least 6 months, as you heard there, is what Rishi Sunak predicted yesterday. And, you only have to take a walk through the centre of London or around the city, around the Bloomberg office to see the effect that these restrictions are already having shuttered shops. Restaurants were starting to get back on their feet in parts of the city, and now they're faced with all these added restrictions, people being told to work from home, many now saying they're throwing in the towel and that they cannot survive for 6 months and they're going to have to give up. This is a little bit of what Mr. Sunak was talking about yesterday, though, about what businesses are viable, what jobs are viable. The government no longer actually agreeing to pay all the wages of businesses that are being impacted. Only the ones where people can actually do some work is there going to be a top-up. That was a huge pivot, and really this sense of more, if you like, creative destruction that the government is saying has to happen because the impact from this pandemic is now going to be permanent. There's going to be a permanent change in the economy. Therefore, the government has had to change tack. But there's going to be a lot of pain and a lot of adjustment to come in the coming months.
David, there were a lot of questions on how the Prime Minister and the government actually handled the pandemic right at the beginning in March. Then testing got better. They had a track and trace system, which wasn't always up to scratch, but better. I mean, what are people saying now? There's a shortage of tests, but I think we're still testing in the UK more than any other European country.
Well, that is the statistic the Prime Minister likes to roll out. But of course, the experience, and again, here in London, there's been an awful lot in the local press here about how difficult it still is to get a test. Demand is far outstripping supply. That's ever since schools and universities have returned. Lots of people getting symptoms, and of course, the weather's getting cold and damp. People are starting to get colds or ordinary kind of seasonal flus and want to get a test and cannot do it. Meanwhile, the numbers of cases are rocketing. We had a record number of detected cases for the whole pandemic yesterday here in the UK, more than 6,000 cases. And when the numbers get so high, the test and trace system really starts to creak at the seams, and it's very difficult for it to cope. Yesterday, the government finally launched its tracing app. That was well delayed, of course. They touted that back in the spring and early summer. It's finally out. Lots of expectation that it's not going to be able to cope again with the sorts of demands when the pandemic is surging back with such force and that people can't get the test. So there are lots of people probably walking around, maybe asymptomatic, who have no idea that they're actually spreading this thing. That is the fear, that this thing is really starting to take off, and the winter has only just begun. So the prognosis, I'm afraid, is not very good.
Yeah. David, there's a stark difference between the scope to scale, just the mix of the economy of America versus Great Britain. Is this the final effort? I mean, is the basic feeling here that this stimulus and assistance plan taps out the government? I mean, are they at a fragile fiscal point with these actions?
They are definitely at a fragile fiscal point. The borrowing numbers were also out this morning. hundreds of billions of pounds of spending the government is having to pump into this economy to keep things going, and yet the economic impact on jobs is really the key thing. And many forecasts this morning, even after Mr. Sunak's support package yesterday, that unemployment is going to spike in a major way. I talked about those restaurants, for instance, shutting their doors permanently. A lot of the service sector, the service sector is a huge part, the biggest part of the British economy. That is why this economy has suffered so badly with lockdowns, with social distancing. Manufacturing, not such a big part here, whereas economies like Germany, for instance, able perhaps to weather this storm a bit more.
Yeah, okay, well said, yeah.
It's really exposing the structural nature of the British economy, and that means the recession is deeper here than other places. The government's having to borrow more money than in other places, and the recovery potentially is going to be harder.
What has been the response to these initiatives, particularly outside London to the north?
Well, it's interesting. I thought yesterday when Mr. Sunak presented his case before he went there, he was flanked. There was an amazing image flanked by the leader of the CBI, the Chamber of British Commerce, and also of the trade unions. So he has managed to get broad support and from both ends of the spectrum there, from the business lobby and from the trade unions, because no one is expecting him to be able to continue paying full wages for every job in perpetuity. So there has to be a balance struck. And the debate going on today across the country is it enough to stop unemployment spiking without, but also letting the economy free to rebalance itself? There does need to be this repointing of businesses. Where in the country is that going to hit hardest? That is a big question. The Tories, of course, very keen to shore up their support up in those northern constituencies that voted them in such huge and surprising numbers before Christmas. But, this wave of unemployment is coming, and no one seems to be doubting that. And there's going to be a lot more pain to come, a lot of job losses, a lot more economic insecurity. Is it going to fall heavier in London or in the north? We're just going to have to wait and see.
Thank you so much. Our David Merritt there, Bloomberg News' senior executive editor, joining us. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom, the official global death toll for COVID-19 is nearing 1 million, but the real tally may be much higher. Public health expert Alan Lopez believes it may be closer to 1.8 million and could hit 3 million by the end of the year. Even in countries with sophisticated health systems, mortality details are difficult to accurately gauge. The UK and France have both reported a record daily number of coronavirus cases, but comparing the current tally with the numbers 6 months ago is difficult. Testing capacity was much lower then. Experts are looking at deaths and hospitalizations as the key indicators. They are much lower than the first peak of the virus, but they are going up again. A London police officer has been shot and killed inside a police station whilst detaining a suspect. The incident occurred in Croydon, to the south of the city. The suspect is in critical condition. The Metropolitan Police has launched a murder investigation. It is rare for police officers to be shot and killed in the UK, which has strict firearms laws. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. Now, coming up, we'll be speaking to David Navarro, the WHO Special Envoy on coronavirus. That's coming up a little bit later on today. We'll talk about, of course, the disease. We'll talk about some of the treatments, and we'll talk about vaccines. This is Bloomberg.
video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg Surveillance. Good morning, everyone, from London, from New York on a Friday. We're having spirited conversations on these markets with futures at -5, a churn to the markets this morning, but really getting set for the fourth quarter. On this Friday, as we near the U.S. election and the distractions of all that, the single most profound statement of the week, no doubt, came from the Prime Minister of the United Kingdom as he addressed his nation and, frankly, the world, and slam this pandemic forward to March of 2021. We need to get out the calendar and readjust. There's no one better to do that than David Nabarro, Dr. Nabarro with the World Health Organization, special envoy for COVID, and with his medical experience back to the younger years of Oxford. We're thrilled that he could be with us this morning. Dr. Nabarro, were you taken back by the Prime Minister's comments, or is this something the pros have known forever, that the pandemic would clearly stretch well into 2021?
I'm afraid the pros have been saying this, and they are saying it will stretch on into next year, and we don't know when things are going to calm down. I'll explain why. This virus is a tricky, dangerous, but also alarmingly persistent virus. It's not one of those viruses that softens over time like we've seen with some influenzas. Coronaviruses generally stick around. And what we've seen is that it's also actually advancing quite slowly across communities, even though the numbers of cases increase rapidly. It's not spreading right across a whole nation like wildfire. So there's an awful lot of people still to be infected in our world, even though we know that more than around 30 million have been infected. So it basically means that the virus is here to stay. It's going to keep moving across the world. It will return back to places which have managed to get the number of cases down. And the only way we can deal with it is by actually learning to live with it as a constant threat and making sure that we get ahead of it and defend ourselves against it.
I've got 8 ways to go here, Doctor, but let me go to the constant threat that's theirs right now. The basic threat seems to be to shut down our global economy. Does the World Health Organization suggest that given the virulence of this virus, that we really do have to shut down economies?
No, that has never been the position of the World Health Organization. And I'm super sorry that sometimes that's how it's presented. We state the following: countries can live with this virus provided they put the defense mechanisms in place. And as far as we're concerned, living with the virus means continuing with economic and social activity. There will be some alterations that are necessary, but that should not mean shutting down whole economies. Instead, we say, find the middle path where you control the virus and at the same time you enable economic activity to continue. I can describe it to you, it's quick, but I think it's really important I get that headline across to you and your listeners.
But David Nabarro, to put the right restrictions in place, we need to understand the virus. And there's so much about this virus that we don't understand. Why are some people asymptomatic whilst others not? And is mask wearing the only way to protect us and others?
Thank you. Yeah, well, of course, this virus is brand new. We've had 8 months or so to study it. There's a huge amount of research underway. There are things we do know. Let's just start with how you protect yourself against being infected and how also you might be able to reduce the risk that you could pose to others. 5 universal precautions. Physical distancing is number 1. Try to stick to the 2 meter or 6 feet rule. Secondly, mask wearing. It is particularly useful who are unable to physically distance. We don't know how totally effective it is, but we do know that those who wear masks are less likely to infect others and to be infected themselves. Thirdly, hygiene. Hand hygiene, cough etiquette, and keeping services clean. Fourthly, isolating ourselves when we are sick with the symptoms of this disease, or indeed in more general sickness symptoms until we know that we don't have the virus. Fifthly, we have to make certain that those who are most at risk are protected. We call these the universal precautions. Tedros, the Director General of WHO, says, do it all. Last point, yes, there are people who appear to be able to transmit this virus even though they don't have symptoms, particularly in the day or so before they actually start to experience illness. Now, this is a problem, but our general view is that it's not an absolutely widespread problem, and it does add to our wish to ask everybody to practice physical distancing, masking, and hygiene as basic activities that should be done by everybody.
So this is a very important point. How many people are asymptomatic, either pre-symptomatic or sick with COVID-19, but will never show symptoms? Do we have a percentage of that, and do they shed the same amount of virus as people that are coughing?
Complete answers to that question are not available, at least from me. The various studies that have been done suggest in the UK, for example, that the level of the population who have the virus without symptoms is really quite small. However, studies in Iceland and studies, for example, from a cruise liner that was moored outside of Japan, suggest that over time you can actually get an increase in asymptomatic transmission. And some African studies have also come out with higher numbers. That will means I won't give you a percent. I'm sorry. And I think if I do give a percent, I'll end up saying something that will irritate somebody. I don't want to do that.
Dr. Navarro, you and I are old enough to remember the miracle of Salk and then Sabin with the oral polio vaccine. You and I remember lining up in school with mothers very emotional over the miracle of these drugs. Why are we having so much difficulty explaining to people when the vaccine shows up, it's basically an act of science and God?
Well, do you know that even though we've had these wonderful vaccines against polio, despite the most extraordinary effort with money and political backing, we still have not managed to eradicate the polio virus. It's really annoying, actually. We've also got a wonderful vaccine against measles, which is a pretty nasty disease, especially in undernourished children. We've not managed to get even a significant chunk of the world's children immunized against measles. There is a strange and quite widespread anxiety about vaccines that's not based on science. It's based on an overarching nervousness about the use of the body's biological properties to defend people against disease. And we're seeing this level of what we call vaccine hesitancy climbing in our world day by day, alongside a number of other quite tricky theories that people have got, particularly about the coronavirus. Our current view is that this is what tends to happen when people are super scared and need to actually find individuals or institutions to blame, and we're doing everything we can to encourage world leaders to stop fanning the seeds of these conspiracy theories, because they're not helping us at all.
Do we understand, Mr. Navarro, why some people get sick and others don't? And as soon as we understand that, is that almost, even more important than getting a treatment for those who end up in hospital?
The trouble with this virus is that it actually is capable of attacking different parts of the body of any individual, and the way in which individuals defend against this virus is quite varied. And that's why I keep having to say to people, it's a really cunning and nasty virus. Of course, it is well known that older people and people with diabetes or high blood pressure are at risk. But I'm sure you've heard that there's about 1 in 20 people who don't die as a result of the disease, but they also don't recover very quickly when they've got it. I know people who are getting constant fatigue, who are getting shortness of breath, and who even are getting heart trouble. And often these are active sports people. So we really can't start saying this is a virus that's trivial. We've got to say it's a virus that's nasty for everybody. And lastly, we've got to recognize that sometimes the reaction of the body to the virus is what actually causes illness.
Dr. DeBar, we've got to leave it there. We are out of time with the World Health Organization and their special envoy, David Nabarro. Much more coming up, of course, election coverage. Stay with us really on Tuesday, a debate. This is coming up rapidly. We are 4 days from the first debate, that at 8:30 in the evening from Cleveland, Ohio. This is Bloomberg. Good morning.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishka Gupta with your latest Bloomberg Business Flash. Palantir plans to go public next week, and Dow Jones is reporting its expected valuation is almost $22 billion. In 2015, investors valued the company at $20 billion, but as recently as this month, PitchBook valued it at less than half that. Palantir declined to comment. Colony Capital is selling nearly 200 hotels to hospitality management company Highgate. It's part of the real estate firm's shift away from traditional brick-and-mortar properties. The deal is valued at $2.8 billion. The vast majority is Highgate assuming debt. Hospitality is continuing to struggle due to the pandemic. And that's your Bloomberg Business Flash. Francine, Tom?
Thank you so much, Ritika. Now, if you look at the markets, they're a little bit undecided. So some of them say it's range-bound. Certainly, we saw a weakening of the tape here in Europe, now down, actually. Stocks are fluctuating because of the virus surge, and so a lot of market participants questioning whether there will be further restrictions on some of these European economies, especially the UK and France. I'm also looking at dollar, pretty much steady, heading for its biggest week since April. Tom?
A bit of a deterioration in the tape right now, -9 on futures, Dow futures -76. The VIX, we're looking at the 30 level. We're at 29.28 there on a relatively elevated VIX as well. I'd note Swiss franc in. What we do at Bloomberg Surveillance is, yes, we look at the markets, but far more, it is good conversation, and we are so fortunate to end the third quarter strong. Edmund Phelps of Columbia joining us yesterday, and we're thrilled to bring you the Nobel laureate Michael Spence, senior advisor to General Atlantic. As we talk to Ned Phelps, Michael Spence on a need for growth. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
There is no change in policy, but there is a lot to unpack in this Fed statement.
My sense is that more fiscal support is likely to be needed.
You saw definite signs of slowing. Do you still see that?
The amount of pain we're going to have in the economy and the challenges we face to get to a full, robust recovery are just going to be much greater.
This morning from 3.4 trillion to 2.2 trillion, but then who's counting stimulus dollars? Only one number matters, and that is 39. Speaker Pelosi wants to assist House Democrats in tight election races. Will the Republicans agree? Correction, well, markets churn on the edge of correction. The real yield is less negative. And some will vote early. The president suggests some will vote often. There are 39 days to the election, 4 days to a first debate. Good morning, everyone. This is Bloomberg Surveillance from New York. Francine Lacroix in London. I'm Tom Keene in New York. Sort of a wrap-up already to the fourth quarter. I mean, with the third quarter. We're going to do that, Francine, next time around. But, Francine, it's pretty good to finish strong with Ned Phelps of Columbia, and we're going to have Michael Spence with us here in a moment.
Yeah, it's great to, to talk about what exactly the economy needs at this very fragile moment, Tom. So, this week was a bit of a shock in the UK because some of the restrictions put in place.
I'll say.
And then we also had a tweet by Tesco. This is one of the biggest supermarkets saying they're going to have to go back to what they did in March and April, which is restrict some of the things that people can buy. So it's like, 3 loo rolls, 3, flower pots instead of flowers to bake instead of, the 5, because they're worried about people hoarding again.
I really must say, as I said in the last hour, folks, particularly for those of you waking up in America, what Prime Minister Johnson said this week shocked the world. There's no question about that. Always shocking. With our first word news, here's Ritika Gupta.
Morning, Tom. Francine. Republicans are pushing back against President Donald Trump's refusal to commit to a peaceful transfer of power. Senate Majority Leader Mitch McConnell tweeted, "The process will be orderly, just as it has been every 4 years since 1792. The Senate also agreed to a resolution reaffirming its support for a peaceful and orderly transition of power." House Democrats have started drafting a new stimulus proposal of roughly $2.4 trillion. The plan could get passed by the House next week. While smaller than the package the House passed in May, it's still much larger than what Senate Republicans say they can accept. President Donald Trump has indicated he'll go as high as $1.5 trillion. In the UK, rebel members of the Conservative Party are threatening to seize the power for Parliament to block new coronavirus rules. At least 40 Tories have put their name to an amendment, all but wiping out the government's majority on the issue. It comes as the Commons is due to review the government's pandemic legislation 6 months after it was enacted. The move would still need opposition backing. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. The tape deteriorates. We've been flat through the morning, and just in the last hour, a little bit of a giveaway. -8 on the Standard & Poor's futures, Dow futures -64, and the VIX not up a big figure, but nevertheless at 29.25. That will have to be monitored. Weaker Swiss franc, that's of note here. Don't want to oversell that, but Euro Swissy shows weaker Swiss franc. Sterling, Francine, can't get out of its way.
Yeah, European stocks are fluctuating. I think investors are weighing the weak prospects of a new American stimulus package to counter the global uptick in coronavirus cases. But for the moment, they're uncertain about which one will win. So you're right, we're a little bit of movement on pound. Treasuries nudging higher. WTI oil steady above $40 a barrel, Tom.
It would be a wonderful morning and a good 3-hour conversation with the laureate, the emeritus professor of Stanford, Michael Spence. There are so many topics to address in his wide-ranging span of economics and our political economy. We welcome Michael Spence, yes, the laureate and General Atlantic senior advisor, to the show. And I really want to start, Michael, with some of the core theories, which is things are endogenous within a system, and then there are exogenous things. And this truly has been the mother of all exogenous shocks, hasn't it? How does our global system adapt to the size of this exogenous shock?
Well, I mean, there are several dimensions to that, Tom. So, I mean, one very important one we've observed, which is aggressive responses by central banks and governments through fiscal programs. Your earlier guest described in some detail the programs that are apparently going to be needed in the UK, which is facing a kind of serious outbreak. And that, of course, has consequences. It builds up sovereign debt at remarkably rapid rates that we probably thought we'd never see. But that's part of the story. And it does, buffer the shock for households and businesses and so on. As the Chancellor of the Exchequer in England said, in the UK said, it doesn't perfectly buffer it. So that this was the mother of all exogenous shocks, and businesses, households, economies, and governments and policies are all doing responding.
Michael Spence, if I trot out a logarithmic chart to impress the mathematician from Oxford, I'm not going to impress Michael Spence, folks, but if I was, I would note that the vectors on Asia economies for deaths are remarkably better than for the Western economies. Is all this is about is we refuse to have the discipline of the Asian societies in fighting this natural disaster?
There's an element of that, Tom. I mean, I think you can say about the Asian societies, which I think have demonstrably managed the coevolution of the virus and the economy somewhat better, on average, than we have in the West. They had prior experience, and they had built-in systems of the type that Bill Gates and others have described, so they actually weren't inventing it on the fly, tracing and testing. Second, some of them made better use of digital technology to support that effort. Third, culturally, and because of past experience, I think they probably had a higher level of compliance with the recommendations that the WHO has made that you just heard a few moments ago. And so on average, I think, yes, for understandable reasons, they've kind of outperformed in this particular huge shock.
Michael Spence, are Western governments supporting the economy in the right way? I don't know whether more emphasis needs to be put on green technology or actually green projects if they want state support, even if it's because of COVID, or whether we're doing too much or too little.
No, the thing that seems to me to occasionally get partially lost, Francine, is less on the question of whether they're doing too much or too little on the economic side. It's that there's at least pockets of lack of appreciation of the importance of getting the virus under some kind of control in order to accelerate recoveries and to achieve a full recovery. And my take on what's been going on is that while there's variance across countries, some sectors recover relatively quickly when restrictions are lifted, and other ones really struggle. The hospitality sector, international air travel, and so on. And that was going to be a story of divergence anyway, right? So I think the failures or the lack of focus, if you like, has been more on really working hard on appropriate steps to get the virus under control. I'm not suggesting you can eliminate it. I think your guest from Oxford and the WHO was absolutely right. We're going to have to learn to live with this, but we don't have to live with it by ignoring it. And so that seems to me to be kind of an important differentiating factor.
But so if you assume, Michael Spence, that actually the virus stays with us for the next 3 to 4 years, and despite a vaccine, we'll have to